Hey there, in this video I'm going to be talking about how you can trade news. So by news, what I mean is not full fundamental analysis. I'm talking about news releases where the market usually sees a pretty big spike. News releases like the federal funds rate, which happened 2 days ago, and that's actually what I'm going to be going over here. So okay, the timing's a bit off. It was actually 8 p.m. for me that this came out, and if you look on the chart, you can see this is where the news release was. So a lot of people ask, how do you catch that spike? So do you enter as the news gets released? Do you enter before? What do you do? So there's multiple ways you can do this, and you just need to be able to understand the risk and reward of each of the ways that you can go about this. So the first way would be to place your entry before the news even comes out. The potential risk with that is, as soon as that news release comes out, your spread opens up. There can be slippage. There can be a lot of complications. There can be a lot of complications when entering before or during the news event as it gets released. Entering like that, you'll usually experience slippage, and the big problem could actually be, for example, you could have a sell in. Let's say this spike didn't even happen to the upside. Let's say just you had a sell and it did fall, like straight away it fell down. What can happen is maybe you had a sell and you had your stop loss here, but what you don't understand is as soon as that news gets released, the spread can open up so much that the spread takes your stop loss. The price doesn't even have to go there. Just because of the amount the spread opens up, you can get a stop loss, and I've seen it happen before. So you can enter before the news, but that definitely wouldn't be my strongest recommendation, especially if you're a beginner. If you're more advanced and you've got money to lose that you're not necessarily worried about, you can trade the news beforehand, but then you've got to understand the risks involved and that you can lose money. So what I'm saying is, if you're going to do that method of entering before the news comes out, rather do it with money that you can afford to lose. So the best way that I think to trade the news spikes would actually be to do some technical analysis on the charts before the news comes out, and then have an idea of what you're gonna do, how you're gonna execute a trade if a certain something happens with the news. So for example, this was an interest rate decision, and they were expecting it to stay the exact same, no change whatsoever. So if there was a change, for example, a negative change, you know the dollar is going to sell off big time. If there's a positive change, you know the dollar's it's going to rally. So what happens when it stays the same is it's usually a positive if it stayed the same, especially if they expect it to. So if they expect it to stay the same and it does, usually that is positive. But then what can happen is, like here, you get this big spike. But this is why I say you do your technicals beforehand, and then you'll know what to catch. So for example, this was how I had the technicals on this chart before the news had come out. I had placed this trend line on the top. I can see that price is moving to the downside. I've done the appropriate wave counting. Wave counting is a whole nother story, and if you want to learn more about that and how we actually trade the markets, there's a link in the description below, taking you to our website where you can learn exactly how we trade and how you can apply your own way of trading to the markets. So check that out down below in the description. But with regard to this, I'd done the wave counting, we had outlined the technicals. I kind of knew what I'd be looking for. I didn't take a trade on this news event, but with that being said, as you can see, price was right here, and then as the news event happened, price spiked to the upside through the trend line and then started rejecting. As soon as that starts rejecting, that's when you can start taking your sell positions. You know you're looking for dollar strength because it stayed the same. Price has initially moved to the wrong direction. So you know you want to sell this, but price has moved up. As soon as it starts pulling through that trend line, that's exactly when you take your trades. And as you can see, it fell for a decent amount until then. So I hope this video helped you in some way. If it did, please give it a like, comment down below if you have any questions regarding trading or what we can offer you with regard to learning how to trade. And if you do want to learn how to trade properly, the link in the description below will take you to our website where you can see more about that. Cheers.